Real estate needs big money and takes time to manage, but real estate trust funds make investing easy and stress-free. Are they the best way to build wealth? In today's video, we will explore why real estate trust funds are one of the most powerful ways to build wealth. Have you ever wondered how some people make money from real estate without owning a single property? Real estate trust funds make this possible. They allow investors to earn steady income without the stress of buying, managing, or selling properties. The best part? Your money grows over time while you do nothing. No dealing with tenants, no expensive repairs, just passive income and long-term wealth. If you want financial freedom and a smarter way to invest, stay with us until the end. Let's get started. But before we continue, don't forget to subscribe to the channel, like this video, and hit the notification bell so you never miss out on more educational and insightful content like this. Visit our website regularly at cryptogolorenews.live for more updates on important financial topics. And for those looking to secure their financial future, check out http://7kmetals.com/mbfloyd. A great affiliate product designed to help with long-term wealth management. Stay informed and take control of your financial well-being. What are real estate trust funds? Real estate trust funds are companies that own and take care of different buildings. These buildings can be houses, offices, shopping malls, hotels, or hospitals. When you invest in a real estate trust fund, you do not own a building yourself. Instead, you buy small shares in a company that owns many buildings. This way, you can make money from real estate without spending a lot of money or taking care of building. How do real estate trust funds work? Real estate trust funds earn money by renting out the buildings they own. The rent money is collected and then shared with the investors. These funds must give at least 90% of their profit to investors every year. This is why many people like to invest in them. If you buy a house, you must wait for its price to go up before you sell it. But if you invest in a real estate trust fund, you can get money regularly without waiting. You don't have to worry about tenants, repairs, or selling buildings. Types of real estate trust funds. There are different kinds of real estate trust funds. Some own apartments, offices, or hotels. Others focus on shopping malls or hospitals. Some do not buy buildings at all, but invest in real estate loans instead. These are called mortgage trust funds. It is important to know about the different types before investing. Some funds give steady income, while others have the chance to grow faster but may be riskier. Why real estate trust funds are a good idea. Investing in real estate trust funds is an easy way to earn money from property. Buying a house or apartment requires a lot of money, but with these funds you can start with a small amount. Another good thing is that you can buy and sell shares whenever you want, just like stocks. This gives you more control over your money. These funds also provide regular income because they share their profits with investors. If you want to make money from real estate without becoming a landlord, real estate trust funds are a great choice. What are the risks? Every investment has risks, and real estate trust funds are no different. Sometimes property prices go down, and that can reduce the money the fund makes. If the economy is weak, fewer people may rent or buy buildings, which can lower the profits. Interest rates can also change. If interest rates go up, borrowing money becomes expensive, which can hurt the trust fund's earnings. Even though these funds are a good way to make money, you should always learn about the risks before investing. How to start investing in real estate trust funds. Starting to invest in real estate trust funds is very easy. You do not need to buy a whole building or spend a lot of money. Instead, you can buy small shares of these funds through a stock market or a brokerage account. This is the same way people buy stocks of companies. Before investing, it is important to learn about different trust funds, check what types of properties they own, and see how they make money. Some funds focus on houses, while others invest in offices, shopping malls, or hotels. Real estate trust funds versus buying property. Investing in real estate trust funds is different from buying a house or apartment. When you buy property, you have to take care of it, find tenants, and pay for repairs. This takes a lot of time and effort. With trust funds, you do not have to do any of that. The company manages everything, and you just receive a share of the profit. Also, buying a house requires a lot of money, but with trust funds, you can start with a small amount. However, since you do not own the buildings, you cannot decide how they are managed. Tax benefits of real estate trust funds. One great thing about real estate trust funds is that they come with tax benefits. Unlike regular companies, these funds do not have to pay federal taxes if they follow certain rules. The biggest rule is that they must give most of their profits to investors. This means you, as an investor, can get a larger share of the earnings. Because of this rule, many people invest in these funds to get regular income while paying less in taxes. Why real estate trust funds? Help reduce risk. Investing in real estate trust funds can help balance your investments. If you only invest in stocks or one type of business, you could lose a lot of money if the market crashes. But real estate often moves differently from stocks. When stock prices go down, real estate prices may stay strong. By adding real estate trust funds to your investments, you spread out your risk. This means if one type of investment does badly, the other can still bring in money. How real estate trust funds have performed in the past over the years. Real estate trust funds have given investors good returns. They have often performed as well as or even better than stocks and bonds. These funds provide two benefits: steady income from rent and growth in property value. However, past success does not always mean future success. Sometimes the real estate market goes down and prices drop. But overall, these funds have been a good way for investors to make money without owning buildings themselves. What the future looks like for real estate trust funds. Real estate trust funds are expected to keep growing in the future. New types of properties, such as data centers and hospitals, are becoming more popular investments. As cities grow and businesses expand, there will always be a need for office spaces, homes, and shopping centers. Even during tough economic times, people still need places to live and work. This is why real estate trust funds remain a strong choice for investors. Real estate trust funds have helped many people make money over time. They let investors earn without owning or taking care of buildings. Even when the economy is not strong, these funds can still give steady income. Many people like real estate trust funds because they are an easy and safe way to grow money for the future. From regular people to big businesses, these funds are a smart and trusted way to invest. If you found this video helpful, make sure to like and subscribe. Also, turn on the notification bell so you don't miss future videos on money and smart investments. For more updates, visit CryptoGaloreNews.live. Follow us on Instagram at CryptoNewsGalore to stay updated on the latest financial news. If you want a strong way to invest in real estate and other valuable assets, check out https:/7kmetals.com/mbfloyd for trusted investment options. Stay informed and make wise financial choices.